Hello, good evening, everyone. My name is Vikas Agrawal. I'm the founder of AIF and PMS Experts India. With me today, Ramesh Mantri. Ramesh Mantri is the director of investments at White Oak. So today we've invited him and we thought of spending some time with him and understand more about how the digital ecosystem is working and how it is comparable to other emerging markets or the developed economy. So welcome on the show of Ask the Expert, Ramesh.
Sure. Thank you, Vikas ji. And, we will talk in detail about, the opportunity in digital in India.
Sure.
And we will
Well,
also,
yeah.
also launched a product which kind of addresses this. Yeah.
Okay. So basically, the format of the show is very simple, Ramesh ji. What we do is we at AIF and PMS Experts India, we keep organizing these sort of knowledge-based sessions. And the whole idea is to basically educate and empower the investor community as a whole, so that they get to learn more about what's happening in this area, and also educate and then take actions accordingly. If they wish to invest, they can invest. So irrespective of any sort of business relationship, our attempt is to basically educate the investor community as a whole. So thank you so much for accepting our request and agreeing to come on the show.
Sure. Thank you. So shall we start?
Yeah, so I'll introduce you first and to our audience, and then probably you can, if you wish to start your presentation, you can do so. I've shared the rights with you. All right, so hello everyone. Thank you again for joining in. So as I mentioned, Ramesh has valuable experience of investing and and he's a financial analyst across the sector. So he founded the company called Ashoka Capital Advisors, which used to advise funds at family offices for equities per se in South Asia. And prior to this, he was also a part of two-member team that invested in South Asian equities and debt for Alden Global Capital, a US-based hedge fund for over 7 years. And prior to that, he was an analyst at CRISIL. So he's worked with large organizations and he's also worked with smallest of the smallest team. So he has a sort of understanding of how to analyze various sectors. So Ramesh is a CFA chartered holder and he received MBA from FMS Delhi, Faculty Management Studies, and he's also cleared his CA. So what we're going to discuss is today, it's a need of the hour that we need to understand how the digital economy, which is also called New India, how it is shaping up. And we thought Ramesh would be the right person because he kind of not only covers this, but has a sort of a very strong domain expertise and understanding in this area. So Ramesh, my question to you first is, we'll have few round of questions first, and then probably you can start the presentation. So there's a saying that in Hindi, there's a very famous dialogue कि मेरे पास में गाड़ी है, बंगला है, तेरे पास में क्या है? So he used to say मेरे पास में माँ है. But आज की डेट में अगर if you talk to any of the corporate, he would say मेरे पास में टेक्नोलॉजी है, so मेरे पास में digital way of running business है, मेरे पास में scalability है because of digital technology, because of various innovations on the technical side. So आज का जो मुद्दा है, today what we want to discuss is if you can take us through how, especially post COVID, we saw that there has been good amount of value migration happening across the sector, across the industry, and today no corporate can say that we don't want to invest in technology. There was a time when technology was perceived as okay, it can reduce the number of jobs, but today it has become a need of the hour. Without any sort of technology support, organizations cannot even afford to think about scaling up to the large to the level which they wish to. So my question is, if you could take us through, because there are few investors who have joined here for the first time, so if you can take us through where do we stand as an economy in terms of digitalization, and vis-a-vis how it is compared to some of the large economies like US, where the Nasdaq, the benchmark is led by high technology driven companies like FANG, which is Facebook, Amazon, Apple, Netflix, and Google. So over to you, Ramesh.
So, Vikas ji, you have asked a lot of questions. And, I kind of more or less summarize my presentation. I have to speak. So I have a few slides. While I can talk, I think it's better to demonstrate the data through which I'm able to communicate this message. So
Sure.
let me bring up the presentation on. Able to see, sir?
Yeah, very much.
So I think first question that you asked is the role of technology, right? And I think there is a great digital reset that is currently underway. There is a global shift in the importance of digital and technology. And I'll give you not very old data. 2017, McKinsey did a survey where they asked the world's biggest global executives why they're spending money on digital or technology. And 48% of the people said it is cost advantage, cost cutting, reducing jobs, productivity, efficiency, something that you mentioned. The traditional mindset on technology was technology is a tool to reduce cost, bring efficiency, productivity. The survey was again done in 2021 post the pandemic, and the answer has completely changed. When half of the people earlier said it was a cost cutting, now only 10% of the people think technology is for cost cutting. 40% of the people say it is for competitive advantage. 20% of the people say it is for newer products and services. So 60% of people now they say that the need for technology is about creating technology as a source of competitive advantage. It is no longer about cost cutting. If I have to win in my industry, if I have to gain market share, if I have to deliver good customers experience, I need to get the technology right. And all of us, while there was a gradual shift in adoption of technology by everyone in the last 20 years, now we came from 2G phones to 3G to 4G and now into 5G. But the pandemic has forced behavioral changes in us. For the first time, now we're consuming a lot of e-commerce, a lot of food delivery, lot of first time, a lot of e-grocery because markets were closed, only e-grocery was working. E-education, everybody saw the potential, but nobody adopted. So e-education, again, e-health, having doctor appointment on video calls. Because a large number of medical appointments don't need physical examination, right? And then of course, entertainment, significant. And even financial services, branches of banks today have become less relevant. Today, you experience the bank on an app. The app of the bank matters more than the number of branches and your access to a branch. So, experience interface has been constantly. The pandemic has forced a behavioral change, and the fact that now we are 2 years anniversary of the pandemic, and it still goes on, means that a lot of these behaviors are here to stay. Even older generations, which were very reluctant to use technology, also have been forced to adopt technology. So that way, it's a big global shift, and the adoption of digital technologies across sectors have been accelerated by a few years. In fact, McKinsey and other surveys says globally the acceleration is by 3 years, but in the Asia region, it is by 4 years. So what was supposed to happen over a 4-year period is happening in 1 year. And that is also one of the big reasons why we had 42 unicorns last year in India. Normally, we used to have about average 9 to 10 unicorns in 1 year. Because that 4-year acceleration happened in 1 year, we had this large number of unicorns. That is one of the big reasons. There's, of course, other reasons why unicorns have happened, because capital is available, capital wants to invest in these spaces, right? Even the traditional companies have now started investing in these spaces. And we have seen that, innovation-led businesses have outperformed the market globally. If you look at this S&P 500, I'm just talking of last 5 years stock performances, despite the recent drop in these shares. Yet, even before the pandemic, they were outperforming. And post the pandemic, the outperformance has only got accelerated in the US market, where technology already had a significant role to play. The other question, and we have seen across the world, whichever company, whichever sector was a technology or an innovation leader, even in the last 5 years has created a lot of value. Whether you compare Amazon with Walmart, Moderna with the US healthcare, Netflix with Walt Disney. And Walt Disney itself is a very innovative company, but Netflix has been an outlier. PayPal versus, the traditional banks. Tesla, of course, is an absolute outlier versus the US auto sector. And, Keyence is a Japanese robotics company, sensor automation company. Again, across the board, across sectors, the innovation, digital technology leaders have created wealth, not only not only over a long term, but also in the last 5 years. So why this has become important? And I think you asked a brilliant question, because जी on कि पहले तो लोग को लगता था मेरे पास गाड़ी है, बंगला है, अभी टेक्नोलॉजी है. And the world has changed in the last 50 years. If you look at the S&P 500 mix, the US market mix, so tangible assets means things like land, buildings, plant and machinery, oil and gas reserves, mines. Intangibles are technology, brand, patents. 50 years ago, this share was small. Large part of the value lied कि आपके पास गाड़ी है, बंगला है, उसमें वैल्यू था. इंडिया में ट्रू है, wealth of people कि आपकी प्रॉपर्टी कितनी है, सोना कितना है.
Yeah,
That
that's
was
the
the wealth
meaning. Yeah, the
50 years
physical
ago.
assets. Yeah.
Yeah. Then what happened was the emergence of consumer companies and pharma companies started happening in the US market. Companies like P&G, Unilever, Colgate started emerging. And on the pharma companies, which are Pfizer, Johnson and Johnson, all started emerging. They didn't have a lot of these traditional assets. In fact, a lot of these large consumer companies don't even do their own manufacturing. They outsource manufacturing. So many of them have very limited plants also. So the value started shifting towards more intangible assets. Then a pivotal moment happened from 1990 onwards, when this big technology acceleration started happening, when companies like Microsoft started emerging, right? And then there was the Netscape's IPO. And last 30 years, there's been massive accelerated shift towards digital. And today, digital in the US market, right? The intangibles is 90% of value, and 10% of the value is only tangible assets. If you go back and look in 1990, the world's highest valued companies, they were ExxonMobil, oil and gas, Chevron, oil and gas, companies like Walmart, physical retailing, some of the banks like Citibank, General Electric, industrials company. And you look at the list today, it's Apple, Google, Microsoft, Amazon, Tesla, Facebook, Alibaba. So that is true. Today, the world is so integrated and online that you're no longer constrained by physical environments. Today, let's say someone does a great, मैं आपको एक छोटा सा एग्जांपल देता हूँ. Let's say कोई अच्छी मिठाई बनाता है. So in a traditional world, right, you were confined to your city to serve the product. But today, through e-commerce, you can actually deliver the product across the country wherever your customers are. So in India, a lot of people anyway migrate, right? And I'll give you a personal example. Some of the sweets, the traditional sweets that come from Rajasthan, where I'm from, they're normally not available. But now with e-commerce, those small sweet shops today sell on e-commerce sweets today. You have traditional pickles, which are only available in one particular city, today available on Amazon across the country. So the markets have expanded. So अब वो जो physical limitation था जगह का, the physical limitation of space, which was your one outlet, is no longer true. As long as you have a great product and customers want to buy the product, you can not only service the product within the country, but in many times even globally. So the world has become a market for you. And it is surprising sometimes where the product sells, where the demand for a product lies. And we have seen whichever companies invest in these things like technology, brand, IP, tend to grow faster across sectors than companies in the other segment. I had given an example of, you talked about technology is why important. And if you just think about banking, right? Within the banks, the branches have become less relevant and the apps have become more important. And one of the, today ICICI Bank is now the leader in delivering technology, digital experience on the app. And I would urge you to try applying for ICICI Bank Amazon credit card on their website. I was just trying to see the website and see how much time does it take, what information. I was not planning to subscribe to the card. And by mistake, I hit a button. And in 2 minutes, they showed me the card online, virtual card, which I could start using immediately. Traditionally, if you had to get a credit card, you'd apply it online, they'll send you forms, you fill the forms, then you get a phone call. Sir, आपका ये signature match नहीं हो रहा, ये document, you need one more document. You would submit then they'll come for physical verification, and then 10 days later, you'll get the credit card. Today, in 2 minutes, you get a credit card. So that is why that product is been one of the most successful products from ICICI Bank of late.
Yeah, true. I think that's a great experience. In fact, Bajaj in Pune is also planning to come out with their online app, wherein Bajaj is now called as technology company and no more a financial NBFC. So that's
No,
how.
that is true. In fact, I think in the whole banking financial space in India, among traditional businesses, I think Bajaj has been a clearly innovator on technology and how in 1 minute they approve your consumer durable loan. Traditionally they'll take documents, sign documents. I think the customer experience they've delivered is phenomenal, and that is why they've succeeded. And of course, they have to get also improve a lot, because today the competition is not about another bank. Today you're going to compete with all the fintech. Your competition is not another bank. From a customer perspective, it does not matter, right? So everybody has to get better. So today the choice for businesses is either you invest in technology and spend a lot of money, or you don't invest in technology and spend money and you lose market share, and that ends up being more expensive. So technology is like essential, absolutely essential for survival. That is why during the entire pandemic, when companies were under significant pressure, they did not cut IT spending, because you are going to kill yourself, because the customer was shifting to online channel. If immediately your physical stores were closed, so if you're not aggressively investing in online channels, you would get killed very quickly. I'll just give an example of a company called Nike. They used to traditionally sell through their stores, even in the US market. When the stores only shut down, but customers want the Nike shoe, right? Now, as much as 31% of their sales come from their own website. Now, if the website is not great experience, they couldn't have made that transition. And today, every business has to figure out how do they sell online to customers directly. And that is why this is now no longer about choices. It is essential for survival.
True.
And you asked this question on how these have evolved, right? And the best example is to look at, US and China, right? US, 13.5% of the index in 2005 was the tech and the internet sector. That has become 42%. So in 16 years, that transition happened, right? China was only 3% in 2010. And what happened 11 years later? 32%, 10 times increase in the weight in the index. Where is India currently? At below 3%. But are we likely to go to this path to get to 20 to 30% of the index in the next decade? The answer is probably yes. And if we have these 80 plus unicorns, a few of them will fail. The failure happens in all businesses. So it's not new to unicorns. Few of them will merge and get acquired. A few of them will create tremendous value. Just like in US, not every company has created value, but some companies have created tremendous value. And just because some company is losing money today does not mean it will lose money tomorrow. Even as 5-6 years back, people doubted if Amazon is ever going to make money. It was a loss-making company. And now nobody questions the idea that Amazon will make money or not. It's a very profitable business. So just because someone is aggressively investing, and that's why you're incurring this cost, versus someone not investing in the future. So when you invest in the future, you have cost. The benefits come later. So just because someone is loss-making today does not mean it will remain loss-making in the future. Similarly, if someone is profitable today, there's no guarantee they'll remain profitable in the future. For example, think of all the traditional US auto companies. Now, they were all very profitable, but now all of them are looking at looking below a cliff in terms of their futures, because the competition of Volkswagen is not Toyota and GM. It is actually Tesla, Google, and a large number of electric startups. And the thing is, the Volkswagen know how to compete with Toyota and GM because they're their traditional rivals. But they don't know how to compete with Tesla. Tesla does not even have dealers. They're selling direct to consumer. So you have a model that's always worked on dealership, and suddenly someone is selling directly to the consumer. Right? For 100 years, the auto industry sold through dealers. And now you have companies selling directly to consumer. And same Ola is trying in India, right? Selling directly to consumer. So we know for sure there are going to be very large winners in the space in the decade or two out there. And if you look at the performance of tech stocks and versus non-tech stocks, whether in the US or China, and we have here on this graph here, they were outperforming the non-tech stocks even before the pandemic. The pace has only got accelerated after the pandemic. And the same pattern we are seeing playing out in India. That does not mean every new age company will create value. There are going to be large failures within the new age businesses. Companies also have to constantly evolve. And the story I always like to say is the first e-commerce company, I don't know if many people remember, was not Flipkart or Amazon. They were the future group companies. There was Times of India. There was Rediff, which was trying to sell online, right? But so the execution matters a lot in the future. For example, Yahoo was the dominant search engine, and then Google came, right? So you have to be constantly innovative, and that's why you have to see. So what then are the key characteristics of winners in digital, right? I would say there are 3-4 characteristics long-term of digital winners. The first characteristic is that the business should solve a fundamental problem through technology. You're not solving a problem if you're just giving me discount and I'm buying the product. Because then if the discounts are gone, I'll stop buying. I'll go to the physical channel and buy, right? So the only reason I'm buying a product from you is simply because you are deeply discounted versus my Kirana store, then that does not work. But if you're making me a product that is not available in my Kirana, then you don't have to discount because the product is anyway not available. If you're telling me to use a product, which I don't know even how to use, but you're teaching me how to use, for example, beauty products, makeup products, Korean makeup products, something someone like Nykaa does, then you're deeply solving a problem. Because see, the aspiration to look beautiful is human, is basic human need. And a lot of people have aspiration, but nobody told us how to do it. See, in India, what happened was the previous generation was not well off enough. So they didn't spend a lot of money on beauty and personal care. So you don't have the previous generation to tell you how to do things to the current generation who can afford a lot of products, right? And a lot of international beauty brands and solutions are no longer available in India. And even if they're available, the Kirana shop next door is not going to carry those products. So some of these companies are selling products in tier 2, tier 3, or rural India. Some of the platforms, 60 to 70% of the sales don't come from tier 1 and metro cities, where these products are already available in malls. They come from places where the product is not available. And I think it's often a misnomer to understand that the tier 2, tier 3 cities can't afford, and there are a lot of categories where the purchasing power in some of these tier 2, tier 3 cities in rural India is very huge. I'm always reminded that the biggest market for Mercedes car in India is Ludhiana, not Delhi or not Mumbai or Bangalore.
Or Aurangabad and Kolhapur as well.
Yes. So we all misunderstand where the consumption ability lies, and so first is unit economics. Number 2, you want to see companies that are addressing a large and growing market. Number 3, the company should have emerged as a clear leader, because it is leaders create disproportionate value. It is not only true in online, it is also true often in a lot of other industries. But in online, it is more true. 4th, you want to see management teams that are credible and focused on the long term and not trying to build a business model where they are trying to create value through getting revenues. One is companies which are creating valuation. One companies which are creating businesses which are sustainable over long term. So that frugal mindset to solve problems with technology. And I'll give you one brilliant example. In technology, there is one company that is going public, right? There, the management will get a certain stake, higher stake in the company, only if public market investors make a lot of money in the shares. Would you want a structure where they're selling shares to you and going away versus they will make their stake will go up in the company if you make a lot of money? I don't have problem in paying a lot of other people making money if I am making money, because then they're deeply aligned with you, right? So that is the kind of structure you want, but unfortunately many times that structure is not there. You have, for example, platforms which solve problem through spending money. You discount constantly, consumers buy because there's discount. When the discount is not there, so typical India big billion day, everybody comes and buys Amazon sale. They don't buy the rest, they buy much lesser, which is a typical Indian mindset. Indian consumers are very smart. You actually should be in a business where you don't have to discount. The best businesses are the businesses which don't discount their products. And I'll give you a few examples, both from technology and non-technology sectors. So for example, the three companies, let me give example in the retailing space, we generally don't discount much. That is, one is Go Colors, other is Trend, other is Manyavar, which is Vedant Fashion, right? And other one is, selective discounts are okay. Once in a while you run a sale, right? Which is good to clear off your non-selling inventory. And even Nykaa. And then there are platforms which are constantly on sale, right? Sometimes I joke that they're like 9 months on a sale and 3 months, 2 months in a year, they sell at some regular price, right? So then if people are buying your product at full price, that means you are actually providing something very credible. You're solving their problem. If customers are still buying your product at full price, then you actually have something going for you. So I hope I have kind of gave the context of the kind of companies we like to invest in. And finally, the valuation has to be right, because सोना भी गलत भाव पे नुकसान देता है, right? You can lose money in gold also at the wrong price, right? So even if you buy a good asset, you have to buy where you can make money of that asset, right?
Yeah. So Ramesh ji, isme I have a question here. So the chart that you are showing me, do you have also similar chart where there is some sort of correlationship between India and US?
No, we don't have in this presentation here.
Mm-hmm.
Apologies, but I can. No, I can show some. Sorry, let me show. Let me show you some. Sorry.
If I'm not wrong, I think from 1980 onwards, when US used to be $2.5 trillion economy, they started focusing more on this startup culture. They started building around these ecosystems, and that's where the Modi government is picked up a certain area that we should also start building on. So any feedback that you would like to share, or anything that you can throw lights on?
No, that's a great question, and let me talk about that. So I apologize, I don't have slides in this presentation on that aspect, but let me talk about that.
Yeah.
See, what has happened is, according to Jack Ma, who founded Alibaba, there are 3 integrants for a digital e-commerce to happen. The first integrant is you need ubiquitous and cheap data. Everybody should have access to cheap data. That problem was solved by Jio, right? In India, more people have access to cheap data than running water or bathroom at their house. That's the reality. Number 2, you need a digital payments platform. There, the government has been a brilliant catalyst in building the payment wallets, and then the brilliant innovation on UPI. And UPI is the world's best now digital payments platform. Today we are tracking on a monthly basis 2 times number of transactions versus China. Historically, China used to be the innovator on payments. Today, the world wants to learn about digital payment stack from us. So the government of India has been a huge, enabler. The third problem you require is strong logistic infrastructure, where we are still lagging. But if you hear this budget, there was 13 times reference to logistic in the budget. In fact, in the since 2000, last 5 budgets, every budget had mentioned the word logistics. And before that, we never mentioned logistics in our budget speeches. So telling you why the government is solving. The logistic problem will be solved by both government and the private sector in India. Unfortunately, India, and that is why when Amazon came to India, in US, you had FedEx, UPS, US Post to solve the logistic problem. In India, this problem was not solvable. So Amazon and Flipkart both have built their own logistic infrastructure. And today you have specialist logistic companies emerge in the country like Delivery, e-commerce express, and load share, and number of players. So private entrepreneurs are solving the logistic problem. So we are getting there in terms of solving these problems. And the government, and I think on 16 January, when we declared a startup day, I think shows also the commitment from the government. Why? From Prime Minister himself. He's himself a big believer in startups. I think what has also happened, and which is an important aspect of India, is we have 1.5 billion engineers in the country, the highest in the world. China produces about 1.2 billion engineers. So we are the largest number of engineers we produce in the country. All other countries are 200,000, 2 lakh people, all other countries. So India produces the largest number of engineers. Number two, unlike China, we are English speakers. And number two, the world does not trust Chinese tech companies. That is why you don't have large global IT services companies coming out of China, right? You can't think of a single name, unlike a large number of companies from India. So we are the tech talent to the world. And that has been already demonstrated by the fact that some of the best tech companies in the world have Indians as CEOs already. When these people were passing 25, 30 years ago, you couldn't have even raised 5 lakh rupees to set up a business because there was no VC culture, no entrepreneurial ecosystem. And families were also not very well afford to not have young people in the family earn money at the start of their career. So the risk appetite was not there. Today, 25 years later, the previous generation is a lot more affluent, right? And the young people today don't have to worry about roti, kapda, or makan in their homes. They can become entrepreneurs on day one. So in India, today, the landscape, 25 years ago, the typical entrepreneur came from an existing business family or who was well connected. Today, they have to compete with the most competent graduates who may not have any connections or business relationships, but today can raise a lot of money on the based okay. And I'm sure you saw the yesterday's announcement on Polygon, right, which raised $560 billion. One of the best companies on crypto, on Web 3.0, right, which is building the platform, was set up in 2017. And one of the most cutting edge technologies on crypto is now coming out of India. That is how the world is changing. I have no doubt to believe in the next 10 years, one of the most defining software companies in the world will come out of India, because the likes of Satya Nadella or Parag Agrawal no longer have to take up jobs. They'll become entrepreneurs from day one, right? And they will create these companies in India. So today the risk capital is available to India, right? And the world, India is the last big market for venture capital to invest. Because remember, the global venture capital can't get into China. China is closed for everyone. So that is why you have so much interest in India. And this availability of capital itself changes the landscape. So today, capital is available for ideas. Earlier, ideas was there, but paisa nahi tha. No capital was available to back ideas.
No, so that brings me to my questions again. So you want to run the PPT, or I'm allowed to ask questions? So.
No, please ask questions.
Yeah, so Rameshji, from an investor point of view, there are two instruments which are available now. On the one side, you have a lot of AIFs which is investing in unlisted companies. These so-called unicorns which are in the verge of becoming unicorns, or they would have migrated as one of the largest unicorns in India, like Byju's of the world. On the other side, you have come out with PMS, where you have more of listed companies where you would be investing and they are taking advantage of digitalization and growing. So, what do you think? Which one is more advisable from a client perspective?
So one, uh, you know, so let me talk about. See, the private space is entirely new tech, right? In AIS and all. And as I said, this space will create a lot of value, but you have to pick the winners because there'll be large losers also, right? And I think there is certain amount of euphoria in the private space. When people tell me about the euphoria in public markets, I tell them there are two more bigger euphorias that you're not talking about. One is private tech, right? New age businesses. And number two is crypto, right? Well, these are actually the two places where there's more, and we have seen big correction of late, right? Seen big correction in crypto. We've already seen globally a big correction in tech stocks, particularly on the Nasdaq. And just don't focus on the Nasdaq index. Index के आप नीचे देखेंगे ना, top 5 के नीचे में, an average stock is down 35, 40, 50% now. And just look at what has happened to, let's say, even a Facebook or a PayPal or Netflix, right? Even the big companies. So one, I think it's possible there is going to be some euphoria that will go out of the private space. And we are now getting aware of some of the governance problems in this space, right? So the governance is an issue all over, whether public markets, private markets. Just because it's private markets does not mean governance is better. Probably is worse, because public markets, there is SEBI danda dene ke liye hai. The regulatory environment is far stronger. From the accountability in public markets is far stronger than in private markets. But still there'll be smart managers who will do well. So you have to take your decision to invest there. I'm not saying the smart people who will do well there. What we're trying to say here is we're saying, and one of the big misnomers Vikas ji often has is कि सारा पैसा private market में बन गया, but public market में तो कुछ पैसा बनेगा नहीं, right? And I think that is a huge error people make. See, US has been the most evolved venture capital market, right? Even there, huge amount of value has been created by best tech companies after they go public. Think about, Google, Amazon, Facebook, Salesforce. All of them had marquee venture capital investors. Yet they've done tremendously well after they went public. So the idea that public, private wala sab value capture kar lega. Even if you look at the Indian market, even in the last 2 years, 3 years IPOs, some of the spaces, think of India Mart, think of Apple, think of Root Mobile, and of course, recent IPO like Map My India. A number of companies have done well. And number of companies have been disastrous. Also, let's not talk about them, but there's not going to be just one winner. It is going to be company specific. Nykaa, there were 2 IPOs the same week Nykaa went public. Nykaa has done exceedingly well and the other company not so, has done very poorly. So it is going to be company specific. What we are trying to do here in the public market is this new age disruptive business model opportunity in the public market currently is small. There are probably about a dozen companies that you can invest in. And not every company is investable, by the way, right? Just because it's a new age company does not mean it is investable, right? And the markets have demonstrated, even the last 2-3 months, the big variance between the same companies which have listed at the same time. So we are saying that this is currently a small opportunity, but will grow bigger over time, right? But there is 2 broad buckets in the Indian market which will also benefit from this big digital thematic that is playing out. The first bucket is companies which are building technology and facilitating innovation for India and the world. These are technology services companies. These are software companies. They're going to be CRO companies in pharma. These companies are building the technology and innovation for the world. They are today essential as plumbing in businesses, right? I always say, आपके घर पे कोई आता है ना, if someone comes to visit house, nobody says your plumbing is very nice. They say your interior is very nice, right? The day the plumbing does not work now, nobody even thinks about the interior because the smell is so foul, right? So these companies are the plumbing of the economy now, as the critical role they've become, and these are great businesses. And the third bucket, and India is an extraordinary power here, and we've already started seeing the early emergence of software product companies out of India, and same is CRO in pharma. The third bucket is very interesting, and not enough people talk about it. Is there are a lot of traditional companies which will adopt technology and R&D and increase the competitive advantage over their peers. And Vikasji, you talked about ICICI Bank versus other banks. You talked about Bajaj Finance versus other NBFCs. You have a very interesting, innovative company, something like 3M, which is globally for 100 years considered one of the most innovative industrial company. I'm giving a few examples. Not that we're going to invest in all of them, but I'm just giving you the context. Even Titan as a company is very interesting in consumer. I'll tell you why. Because Titan, people think that it is a physical jewelry retailer. But Titan also owns 72% stake in CaratLane, which is India's best jewelry retailer. A lot of people have tried online jewelry retailing in India, but they have failed. This CaratLane has been growing at 50% CAGR for the last few years. Last quarter, they grew 67% on revenues. It's a very profitable business. So Titan actually owns the equivalent of Nykaa in its portfolio, but we don't talk about it much. So, and the consumer in India, because it's by Tanishq, which is a people trust that if I even online order jewelry, I am going to get 24 karat or 22 karat that I've ordered, because people trust the Tanishq brand, the Tata group, but it isn't true for online platforms.
Yeah, plus these new age, female women especially, they don't like to go to their traditional jewelers. They would like to either go online and buy, or they would visit any of the Tanishq shop nearby their residence. And I was also studying the data other day, and what surprised me is this jewelry which is costing between 50,000 to 1 lakh. The contribution of Titan is more than 80%.
True.
The market share, which I was shocked to see.
No, even today, if you look at the whole jewelry industry, Titan's overall market share is still single digits. When you look at the whole, we don't have a good estimate of jewelry industry size in India because it's entirely mom and pop, fragmented, and there are, how cash gets, used in the industry. But even if you look at some reasonable estimates, Titan is still, very, single digit market share in the jewelry space, and they're expanding. They're going online, right? So they're expanding the set of opportunities. So I'm saying the digital leaders will not come just from tech or new age. Even existing companies which use technology well will create a competitive source of competitive advantage. And this example of pharma retailing, right? Traditionally, till the pandemic, we all bought medicines, going to store, buy medicine. Now we can order on app. We can order diagnostic tests on app. No longer people you have to go to a diagnostic center, wait there. Today they come to your home, right? And people are willing to pay. So it's no, and of course the test report also gets delivered online. There's no, even telehealth. Again, the prescriptions get delivered online. There's a video call. So even these businesses are disruptive, and some of the existing companies are innovating here. You have Apollo, you have have MedPlus, you have Dr. Lal Path Labs. So a number of existing companies are also innovating here. So what we're trying to build here in the digital leaders portfolio is just not focus on new age disruptive business models, because that opportunity currently in the market is small.
Yeah, I was coming to that. So how do you build the portfolio? So, there are two lobbies now, what I can see, Rameshji. One is that traditional way of investing, highly capex businesses or Tata Motors of the world, or, they're doing well. And from 70 rupees to 700 rupees, there's nothing right and wrong about it. And the other, school of thought is that investing in asset light businesses or technology driven businesses, and we saw that huge amount of growth coming from that side as well. Now the question is that there's some thoughts which are like in between and have perception that these new age businesses, I would say that they're painting the wall with the same brush, that they are saying you have Zomato and you have Nika, and they are kind of saying that these are new age businesses and eventually they will go down. So what are your views and how do you construct the portfolio at Vital?
So great question, Vikasji. And I think first, I just want to talk about Tata Motors. I think Tata Motors has done well because it has emerged the leader in electric. And even today, now Indian market is shifting to electric vehicles in cars, but we don't have enough. Maruti doesn't even have electric car product as we speak, which is like a 50% share of the car market. So the dominant guy doesn't have. Hyundai has limited products, and none of the other brands have, below that have products. So Tata Motors actually is a market leader in electric vehicles in India, and that is the future. And the reason for that is because of the JLR investment and electric vehicles. In the month of December in Europe, electric vehicles outsold traditional internal combustion engine vehicles. So Europe has already made this very rapid shift, and Tata, because of their investment in JLR, is now able to position itself in electric vehicles well in India. And that is also one of the reasons they've got a very large investment in the electric business. That's why. So one of the reasons Tata Motors has done well is not because of the traditional business. It's because they have a leadership in the new technology spaces which are relevant in the auto market. So I hope I'm explaining Tata Motors here.
Sure.
Now coming to new age and traditional, I think the money is to be made in both places. There is no single idea that all these companies will collapse. I think that is a lesson. If you see all over the world, every part of the world, whether US, China, you've seen massive success stories in this space. So it would not be smart enough to think all these companies will fail. In fact, some of these companies will create tremendous value. And I would urge all of you to see what your children are doing. What are they buying? How are they interacting? Because they are the generation of consumers. When they start earning, will they go to the bank branch or will they experience on app? Will they go to a physical store or will they buy on app? Right? Will they buy on Nika or go to a traditional store? Will they buy online jewelry or go to a traditional store? Because remember, that is that India is a young country. Our median age is 29. So young people can easily adopt new technologies because they are not used to the old habits. So I think clearly the future is there, and we have seen enough success stories all over the world that anyone who doubts the success of these companies, I think that argument is not well thought through, in our opinion. However, that does not mean all of them will be winners. Even in US and China, there have been huge failures, but there have been huge successes. It's your ability as an investor to identify the right opportunity. And traditional, again, the traditional businesses where the competitive advantage is a low-cost structure or a brand, which are not technology, but in certain businesses that make sense and you will make money off them, right? But the companies in the traditional side who adopt technology well, we can be bigger winners. And that is why we have one large bucket of our portfolio for this.
Okay, understood. My last question, and then I'll open the forum for Q&A. So I can see some people have already started writing their questions. So please type in your questions in Q&A box and not in the chat box. So I'll start taking them. So, Rameshji, in our industry, there is a saying in Gujarat, "Bhav Bhagwan hota hai," and there is this perception which is building up that suddenly it goes up, especially the new technology company eventually will come down, tab hum jaake kharidenge. So what is your views on that?
So Vikasji, we don't have a trading mindset. We are not technical analysts. So we of course respect the collective wisdom of the markets. जैसे वो आपने line बोला भाव भगवान है. That means when stock prices move either side, you should rethink why that is happening. And when there is disconnect between the reality and the fundamentals, right? That means if the business is doing well, but the stock has corrected, it may be an opportunity to deploy more capital. At the same time, the stock is doing well, but the business is not. Probably there's an opportunity to exit and reallocate that capital. So we respect markets and think through the collective wisdom, but we understand that our business is to disagree with the market over long term. That is how we are going to create alpha, is to identify opportunities that on prima facie don't look like opportunity, right? I'll give you example. In 2017, if you look at IT stocks were not doing well when we started, White Oak started. There are a lot of articles in the prominent newspapers that said this is the death of Indian IT services industry. There were very smart people in the market who said ये सब stock तो 10 साल में zero हो जाएगा, ये artificial intelligence है, Google है, Amazon है, Microsoft सबको खा जाएगा, right? But the people didn't understand what is the critical role these companies play. If they thought through that, in fact, the advent of new technology is good for IT services company. You are worrying कि नया technology आ रहा है, तो IT services के लिए bad है. Actually, it is good for your business. I'll give you a small example, right? Let us say the government changes the income tax law completely, right? Or some tax regulation completely. You may think the existing chartered accountants will get impacted because their knowledge has become irrelevant. Fine, experts in tax and all. But actually, people who are doing tax on their own, there's no way they can adapt to the new environment. Those professionals, because that is what they have to do, they will put in the effort to learn it. So actually, you'll become more dependent on them rather than less dependent on them if the changes happen. So I hope I'm able to explain. When technology changes and becomes more complex, you have to become more dependent on technology services companies, then become less dependent on them.
Sure. So a couple of questions. In the meantime, there is this request that if you can conclude your presentation, if any other slide you think is important from.
So I think I just want to explain why White Oak is, and take 2 minutes of the presentation time to talk about why we have launched this product. See, we generally don't believe in launching thematic products, either some infrastructure or banking fund or pharma fund and all, because we're not sure the relevance of the theme even 2 years, 3 years down the line. We believe this technology thematic, from what we have seen, the evolution in China or in US, this is good at least for a decade, if not 2 decades. And we have seen the huge value creation happen. So we believe this is a long-term opportunity for people to take a core thematic exposure in their portfolio to the digital leaders in the Indian market. That is why we launched the product. So we wanted to launch a product which is a long shelf life rather than a short shelf life. And our team, unlike a lot of other managers, already the investing team has experience across developed markets and emerging markets. I'll tell you, the founder, Prashant Khemka, when Google went public, on day one, he bought a second largest position in his portfolio when Google went public 16 years ago. So we have experience. We are also building at White Oak a global emerging markets team. For the first time in India, an asset management firm will launch an actively managed global emerging markets fund. So if you think of a lot of other companies, they either do ETFs or have partnered products where they're distributors. We are first time an Indian firm is going to be manufacturer of a product. If the multinationals can come and build AMC business in India, why can't we do the other way around, right? So because of that, we are hiring professionals who have looked at emerging markets, tech opportunities in China, Taiwan, Korea, Southeast Asia, Latin America, and all. And many of these markets are much ahead of India in terms of the revolution. So our team is able to learn from those experiences and understand the opportunity in India. Number 3, White Oak has been a very active investor in pre-IPO tech companies, and I can give you a few examples. Unfortunately, the PMS product, because of the regulatory reasons, you can't invest in private companies, or even be an anchor in an IPO. And I'll give you a couple of examples here, 2 examples to explain the kind of investments we made. We've invested at the group level in our funds. First, the leading CPaaS company in Bay Area, which will go public in NASDAQ. This company is called Gupshup. It is considered by far one of the best CPaaS companies in India. I'll give you an example. They have as much as 50+% market share in WhatsApp communication that happens. So if your bank is sending you bank balance or an app is sending you some messages on WhatsApp, it's most likely facilitated by Gupshup. We invested in this company 3 months ago, which did an IPO in Sweden, not even an IPO in India, which derives 70% of revenues in India. And I'm sure many of you are customers, use this app. It's called Truecaller. This company is growing revenues by 100%, operates at 45% EBITDA margin. It is not a loss-making company. It is probably one of the most profitable companies you can find even in the Indian market, right? And then, of course, within the Indian market, you had number of companies where we have been pre-IPO investors, some of the most interesting pre-IPO investors we have been. So we have this capability to understand this space and identify the opportunities. I'll stop here, and I know we can have more questions, Vikasji.
Yeah. So the question is, can you show some examples of your portfolio of the one that you are showing, digital one?
No, so we generally don't want to talk on stock specific names, particularly at the portfolio level. But if you and I did mention a few names, and let me give you a few examples, and it's very easy sometimes to guess these companies, right? So one company, we invested in a mid-size Indian technology services company. That's a leader in digital engineering in healthcare, life sciences, and high tech. I'll give you a simple data point. They're growing over 30% in dollar terms organically currently. They are a big partner to Snowflake, which is the leading cloud data warehousing solution. They're a top digital integration. I'm giving you a simple clue. This is the fastest growing IT services company in the country currently. It will not be very difficult for you to figure out. This company is not an IT services company. It's a niche banking software company. This is not an IT services company. They're already a world leader in some of their core products. I'm not talking of leader in India, but globally they are a leader in core banking products, in cash and liquidity management. So banks like JP Morgan, Citibank, run on their software. Again, it used to be a less profitable company, but after the pandemic, it has become a very high margin company now. And again, not very difficult to judge from the market. In terms of new age disruptive business models, we are invested in vertical category leaders where you're solving on the online classified platform, you're solving one problem. You are a vertical specialist. We are also looking at horizontal B2B, where you're acting as a larger platform for the whole B2B space. Not very difficult to guess these names because there are only very few listed companies in India in these spaces. We're also invested in e-commerce category leaders. See, in e-commerce, there's horizontal like Amazon, Flipkart, JioMart, and then there are specialists who are solving one problem at a time, and they're very good at solving that problem. For example, Nykaa is a category leader, right? So we want to invest in category leaders also. And then there are broader opportunities in the consumer internet. One thing I want to clarify here, in the entire portfolio, there is only one loss-making company. So this is not the classical private equity late-stage venture capital funds, where I presume out of the 80 odd unicorns, 70 of them will be losing money today, and some of them losing large amount of money. This is a portfolio of very profitable companies many of them distribute cash because they just can't. The business is so good that they can't even reinvest that capital back. So this portfolio has very different characteristics than the EIF product that you had mentioned, Vikasji. I hope I'm able to explain. These are extremely profitable companies. Typically, every company will be a market leader in what they do.
Yeah, so that was the point exactly, Rameshji, if you look at on the unlisted space, as I mentioned here, whatever price is, you'll have to respect. The market is smarter than anybody else. Whereas on that area where I see that either the promoters of the company deciding the rates or the valuation companies which has limited understanding of the segment is able to define. So especially on the asset light businesses, I would say that understanding the business and defining the valuation has some sort of mismatch. I could be completely wrong.
Yes, so we ourselves spend a lot of time engaging with these companies, and even just today I had two calls, with the new age business companies. Some of them will go public in the next few months. Some of them will go public a year down the line. But we spend a lot of time engaging with these companies early, so that we're able to track how they are delivering, how they're evolving. If you spend more time with someone, then you get to see their behavior, whether what they promise they deliver or not, right? Because many at the time of IPO, everybody says they will get the moon, right? That is how typical every IPO. But we know ultimately many companies do not. So you want to engage with them early, understand how they operate, how they behave with investors, right? How they when things don't go right, how do they communicate? Because when things are right, it's easy to communicate. So we engage very early as part of our investment process. So by the time they go public, we have already have a reasonably better understanding of the business and are able to take investment decisions based on that.
Sure. Last two questions. So first, the next question comes from Mr. Sandeep. So the only profitable yet venture capital minded digital company with a head start I can think of is Info Edge. What do you think about the future of this company? Anything, anything that you like to say?
So, generally would not comment on stock specific, but we acknowledge, InfoEdge has created tremendous value. Since the time we started White Oak 4.5 years ago, it has been part of our portfolio. And I think the founders, the management team is very disciplined, one of the smartest venture capital investors, right? But they also have to constantly deliver because the world is changing. So just because you won a few battles does not mean you can win every battle, right? So everybody has to innovate.
True, true. Next question is, do you think it will be difficult for PharmEasy to fight with 1mg of Tata Group or maybe Reliance NetMed?
See, I think, again, I think what we are seeing of PharmEasy clearly currently has the leadership, right, in terms of what they're trying to do. Very ambitious, extremely passionate founders. Because the pharma market is large, so everybody's jumping in, whether Tata's through 1mg and Reliance through. We'll have to see their execution, right? But just because someone can put a lot of money on the table, right, does not mean they can succeed, right? And we've already seen that, right? If you think about retailing, it's not the earliest company in the country that is a winner. It's a very different frugal company that is a winner in value retailing in India. So it is going to be on execution. Today, money is no longer a competitive advantage. Let me point out today, everybody, if you're capable, you can access tons of capital today. 15, 20 years ago, if you were a large group, you had the capital, other entrepreneur didn't have access to capital. But today, if you are brilliant, the fact that venture capitalists continue to fund some of the companies which are competing against the deep pocket Indian groups tells you that a lot of people have very different opinion. And it's unlikely that these large groups can win in number of categories. They're trying to do too many things. See, the advantage someone like a PharmEasy or a Nykaa has is they're deep category specialist. They only know one industry and usually focus to try to do well. While you think about what, let's say, the Tatas and the Reliance are going to do, they're going to be supermarkets, sell you a lot of products. But customers, so unless you don't offer a great experience to customers don't care kisse kharidne ka hai. They'll buy the best experience. And if you go back and look at a lot of industries in India, and even just because people had money does not mean they won. It's the best executors who have won over time.
All right. With that, we're running short of time. So whatever question that any of the investor has, please feel free to reach out to me, or you can write to me at vikas@aifpms.com, and I'll request Ramesh to answer that question if I am unable to answer.
No, I think thanks a lot for the hosting us, Vikashji, and thanks a lot for the audience on attending in the evening and joining us for an hour and over an hour. Thanks a lot for your time.
Thank you. Before we conclude, Rameshji, I would like to take this opportunity to thank you for taking the time out from your busy schedule and joining in and joining the mission of educating our investors. So thank you so much.
It's a pleasure, Vikashji. Thank you.
Thank you. All right.